If you need to send money from India to Dubai or anywhere in the UAE, this video is going to walk you through exactly how to do it, step by step. I'm going to keep this simple and practical, so you can get it done without overpaying or running into problems. Let's get into it. Step 1. Know what you need before you start. You're going to need a few things ready on both ends. On your side, the sender in India, you'll need your PAN card, a government-issued photo ID like your Aadhaar, passport, or voter ID, and access to your Indian bank account. On your recipient side in Dubai, you need their full name exactly as it appears on their bank account and their IBAN. In the UAE, IBANs are 23 characters long and always start with the letters AE. If your recipient banks with Emirates NBD, Mashreq, ADCB, or any other UAE bank, they can find their IBAN in their banking app or on their bank statement. Get this from them before you start. If the IBAN is wrong, the transfer will fail or get delayed. Step 2. Understand India's rules for sending money abroad. This is the part most people skip, and it comes back to bite them. In India, all outward remittances by resident individuals fall under the RBI's Liberalized Remittance Scheme, or LRS. Under LRS, Indian residents can remit up to $250,000 per financial year for permissible purposes like education, family maintenance, travel, investments, and more. The financial year runs from April to March, and any unused portion expires on March 31st and doesn't carry forward. Now here's the tax part you need to know about. When you send money abroad from India, your bank collects a tax collected at source, or TCS, on your behalf. There's no TCS on remittances up to 10 lakh rupees per financial year. That's the combined threshold across all purposes and all banks. Once you cross that 10 lakh limit, the TCS rate depends on why you're sending the money. Budget 2026 reduced the TCS rate from 5% to 2% for education and medical remittances exceeding 10 lakh, effective April 1st, 2026. If the education payment is funded through an approved education loan, TCS is zero regardless of the amount. For other purposes like investments or property, a 20% TCS rate applies on amounts exceeding 10 lakh. The important thing to remember is that TCS is not an extra tax. It's an advanced tax that you can adjust against your total income tax liability or claim back as a refund when you file your ITR. It shows up in your Form 26AS. So you're not losing that money permanently, but it does affect your cash flow in the short term. Step 3. Understand how transfer costs actually work. Just like with any international transfer, there are two costs to watch. The first is the transfer fee, the flat or percentage charge the platform takes. The second is the exchange rate. The real rates between the Indian rupee and the UAE dirham is called the mid-market rate. It's the one you see on Google. Some platforms give you that real rate and charge a small, transparent fee. Others advertise low fees but quietly mark up the exchange rate so your recipient gets less money. Banks like ICICI, Kotak, or SBI often charge high fixed fees of 500 to 1,000 rupees plus hidden costs through poor exchange rate margins that can be as high as 8.6% of the transfer amount. That's a massive difference on a large transfer. So when you compare options, always look at how much your recipient will actually receive in AED. That's the only number that matters. Step 4. Choose your transfer method. You've got two main paths. The first is your bank. You can walk into your bank or use their online banking portal to initiate a wire transfer for the SWIFT network. It typically takes 12 to 48 working hours for the money to arrive. Banks are secure and reliable, but as we just covered, they tend to be the most expensive option because of the combination of flat fees and poor exchange rates. Sending money through Indian banks can be around 10% or more expensive than using a top online transfer service. The second path is an online money transfer platform. Services like Wise, Book My Forex, and others let you send money from your phone or computer. These platforms typically offer much better exchange rates and lower fees than banks. Wise, for example, uses the mid-market exchange rate and charges a transparent fee on top. For an 80,000 rupee transfer to Dubai, the fee starts at around 1,539 rupees. And 74% of Wise transfers arrive in under 20 seconds, with 95% landing within a day. That's significantly faster and cheaper than a bank wire. Step 5. Send your money. The actual process is straightforward regardless of which platform you use. You create an account and complete your KYC verification. They'll ask for your PAN and a government ID. You enter how much you want to send in INR. The platform shows you the exchange rate, the fee, and how much your recipient will receive in AED. You enter your recipient's name and their 23-character IBAN, starting with AE. You choose your payment method. Most Indian platforms let you pay via UPI, net banking, or NEFT RTGS. You confirm and send. The platform handles the conversion and routes the money to your recipient's bank account in the UAE. You'll get a confirmation and a tracking number, so you can monitor exactly where your money is at every step. Step 6. Keep your records. This one matters more in India than in a lot of other countries because of the LRS and TCS rules. Keep a digital folder for each financial year with your Form A2, purpose code documentation, remittance statements with the Forex rates that were applied, and your TCS certificates from the bank. This makes filing your ITR and claiming your TCS credit much easier. If you're sending money regularly throughout the year, keep a running total of all your LRS remittances across every bank and platform you use, because the 10 lakh threshold is calculated cumulatively across all types of remittances during the financial year. And that's it. Sending money from India to Dubai is not complicated once you know the steps and understand the rules. Get your recipient's IBAN. Choose an online platform over your bank to save on fees and exchange rates. Stay within your LRS limit or get it properly documented if you need more. And keep your records clean for tax time. That's everything. Check the links in the description for the platforms we mentioned. Like, comment, and subscribe for more tutorials like this one.